Hi and welcome to Techtalk, and this week we're featuring Fintech. I'm joined by Tony Thrassis, CIO of open banking provider Frollo. Hi Tony.
Morning.
Morning. By Arun Maharaj, CEO of home loan comparison provider hatchings. Hi Arun.
Hi Tim.
And by Kathy Null, advisor to Fintech VC Seedspace. Hi Kathy.
Hi Tim, it's Kathy Lyle. Thank you.
So Fintech's been one of the fastest evolving tech sectors because of the scale and conservatism of the $1 trillion US traditional banking sector that it's disrupting, I guess. And drivers include the development of new apps and platforms like BNPL, improved security and blockchain protocols, more supportive government regulations, and last but not least, of course, surging customer engagement driving adoption growth. And there are no fewer than 60 fintechs, in fact there's a few more, listed on the ASX. And domestically, the sector passed a key milestone in July this year when the Big Four participated in phase one of the open banking by fully sharing data. So Tony, let's start with you. Frollo's core value prop is that it digitally allows users to get on top of their finances, excuse me. And it's already attracted over 100,000 users. So can you describe how it fulfills that proposition? And I'm also keen to hear your thoughts on the advent of open banking here and the ramifications of that.
Okay, yeah. So at Frollo, we provide our customers with an aggregated view of their bank accounts, even if they're across banks. So it's like multi-banking, I guess. You can get that aggregated view. We use our analytics and our AI to analyze a user's financial information and provide them with insights into their finances, as well as smart insights to improve and achieve their financial goals. Now, we also provide our users with tools so they can take action. So like budgeting, goal setting, and product switching. And then open banking, what it does is really replace screen scraping with a faster, more reliable, more secure, and better quality data, all of which we can base our insights and recommendations on. So it's a key platform for us. And then through open banking, we have access to real-time product information as well. So once we can see that product information and all the terms and conditions of different products, we can use that to help our users find a better deal. And of course, finding a better deal is the ultimate goal of open banking and the government.
Cool. Arun, your proposition comprises more loan products, better rates, and a more user-friendly service. So can you take us through that differentiation and how your business is going?
Sure, Tim. Look, hashing actually is more than a comparison site. It is actually a online mortgage marketplace. It's a platform, and we're unique in that we service mortgage brokers and we also service consumers. So having a portal. Just before I just go into what we do for both of them, Tim, just a quick background in the industry. There are 15,000 mortgage brokers in Australia, okay? And last month, I don't know if you saw, but in October, it was a record month of loans, home loans, and there was $23 billion written last month in the middle of COVID. And 60% of them were generated by mortgage brokers for banks. So part of our business offers technology to mortgage brokers so that they can grow their revenue, become more productive, and engage with the consumers. And in terms of the consumers, we offer technology to consumers to connect with mortgage brokers, to look at products, and just adding on what Tony said, with open banking coming, they will require more of this technology to engage with what's out there in the marketplace. So we know that most of the consumers now are going to be millennials coming through. They already have, and mortgage brokers, they are 60% of mortgage brokers. So 9,000 mortgage brokers in Australia are 1 to 2 man persons around the country, and they need to adopt technology. So hashing offers a unique solution in that it provides these brokers with access to a one-stop hub where they can utilize our technology and our products, and the consumers download our apps and basically do a whole lot of things.
It's interesting that we're at record levels of mortgage creation. Is that because of digital new entrants like yourselves, do you think?
Not the real reason, Tim. I think record low interest rates definitely driving that fact, and also, yeah, the product offering out there. It's easier for people to now engage and get financing. So, and remember, these $23 billion worth of business are new loans; they're not refinancing. So it's incredible that the consumers out there know what's happening and are looking at property as an investment. One of the things that I found with hashing was we engaged Google to do a survey, and it was dumbfounding that 70% of all consumers, Tim, they actually research everything about products, banks, they go to real estate websites, banks, and then they engage with mortgage brokers. So now when they come to mortgage brokers, they're empowered, they know about the product. In the old days, mortgage brokers used to talk them through how things work and what to do. Now there's a massive expectation that technology is a part of all of this.
Mm. Fascinating. Well, it's a good macroeconomic signal as well, I guess. So glad to hear that. Kathy, to you, SeedSpace was formed, I think, specifically to capitalise on the fintech revolution, was it not? So can you run us through your criteria, what you look for in a fintech investment and how you see the space at the moment?
Thanks, Tim. So we're an early stage VC, or an ESVCLP, which is a very specific regulatory approval here in Australia. So we probably look at around 60 deals a month that come through the pipeline with us. And first thing we do is kind of make sure it's fintech. It's surprising how many companies kind of come in under the umbrella, but when you drill down a bit, they're not actually fintech. So we probably weed out about a third that comes through to us at that stage. And we're very specific at the stage of evolution of the tech. So we are early seed stage. We do a bit of late seed, but we're definitely not at that Series A and beyond. So we are right at that post-bootstrapping stage for the organisation. So really critical fundraising stage for companies right then. We really care about the problem they're solving. Does it resonate with us? But also, is it a problem that actually wants to be solved? There are a lot of problems out there, but people are just not ready to move forward with new tech or new business models yet. So we really need to understand, is it one that wants solving? The size of the addressable markets, obviously very, very important. Good to have it large and perhaps outside domestic borders as well, something that's potentially global. And the financial forecasts are really important when we're looking at those. The go-to-market strategy, how they're going to find customers, how they'll target them, their distribution model, and then also what's the competition? Have they got a bit of a head start? But I'd say, and then the technology is very important, what they're utilising for that. Is it robust? Is it something that's going to be fit for purpose? But the number one thing is the founding team in this early stage. It's all about the people who are doing that. So we ask a lot of questions of founders, why are they launching the business? We get a lot of founders that have been doing things perhaps in hospitality that are suddenly doing things in property or something like that. So are they subject matter expertise? Are they full-time? Are they really devoting their time and energy to this? And how do they all come together as a founding team? Because you often find when there's going to be issues, it starts to happen when there's serious money involved at Series A, B, and C. So we want to be really clear on what the dynamics are of the team, what's the roles and responsibilities, and have a bit of a lens, if you like, around culture, around values and diversity early on.
Interesting. So we are talking about fintech, so let's shift to the technologies being deployed. I mean, Tony, can you take us through where Frollo's app and SaaS integration platform are at their smartest, I guess, and how?
Sure. So I guess there's two parts to this question for us. One is around our B2C, which is our app. It's a native app. We have a iOS app and Android app that you can download, and it's free to customers. And the main purpose of that is to help people manage their money. But it also showcases our capabilities and serves as a testing ground for new features that we want to introduce both for B2C and for our B2B play as well. So all of those features and more we sell to banks, fintechs, lenders, other businesses, to provide them with the tools to improve their own customer experiences. So it's a good test bed, what we do for our B2C platform with over 120,000 users. It's a great test bed. So we also focus on improving financial well-being. So we have market-leading categorization. It's important to understand where someone spends their money. Is it spent on petrol? Is it spent on fees, taxes? Is it living? Is it lifestyle? So we analyze and we categorize those transactions, and we group them into buckets that people can then understand, and to help them manage their spend and manage their finances. So the real power is, of course, that we provide smart insights and nudges, so they have that interactivity every step along the way. And just as a couple of examples of real impacts, on average, our users have increased their savings by $1,000 within the first 3 months of using Frollo. And on average, our users have reduced their credit card debt by more than $400 within the first 6 months of using Frollo. So there's some real examples of customer interactions that do work.
Impressive too. So Aaron, I mean, how will you be deploying technology to further improve hatchings offering?
Tim, that's a good question. We also have a B2C and a B2B offering, and from a B2B perspective, which is brokers. You know, brokers out there, it's a transactional industry, mortgage broking. So they're naturally hunters. They're not bad, but they're average harvesters. So our technology allows them to harvest what they've hunted. Now, because it's such a transactional world, when a deal is done, they move on to the next deal. So, but there's a lot of lost potential revenue there. So we're building referral systems now where brokers, keep a tab on what's happening with their client base, because obviously once they get paid the commission, they just have to move on to another revenue source. So, but there's a lot of changes in this industry coming through. I'm not sure, Tim, if you're aware. Responsible lending is on its way out. Who knows what's going to happen to the trail commissions for brokers? There's a massive shift, and Tony's team are the forerunners in open banking. That will definitely shake the tree. There's going to be a lot of new business opportunities there. So we are looking at what we can do for brokers end to end. We focus really on the hunting part and the harvesting part, not when they actually get the deal and go to the aggregators and lodge it. We really are looking at brokers when they run their business and giving them all the tools. For example, we have digital fact finds that we're working on now and have rolled out, where the chatbot engages with customers now over the phone, gets all the responses, and automatically updates our systems for the broker. So they real time get to see all the answers, and then it generates all the different forms that are required. So things like that improve productivity, and we're spending a lot of time and effort there. From a consumer perspective, with open banking now upon us in the next, well, it's here now, but in the next 6 months, it'll be fully here. Our consumer app, our consumer portal is now focusing on what this millennials coming through really want from product switching. What sort of, in the old days, I don't know if you guys use brokers, but the biggest technology was going to a website and looking at a one of those rate, what do you call them, one of those calculators, and that was tech, right? Nowadays, customers don't look at that. They want more than that. They want property reports. They want more macro stuff. They want everything that helps to make the decision, because there's so many products out there. They can choose whichever one. And so that I think our app, our consumer portal, will allow customers to consolidate the view of what's out there.
Interesting. And Kathy, I mean, as you mentioned, you see a profusion of new entrants, new ideas, new tech solutions. So what kind of tech developments, I suppose, have excited you most, including, I guess, among your investees?
Yeah, it's a good question, Tim, and I'll just focus on the tech versus perhaps business models, which we might get to later. And we've just heard from Tony around the AI piece, and Aaron with his RPA, the chatbots, the robotic processing. They're two very key areas, I think, in tech going forward that we're very interested in. Anything that has purpose, right? We're seeing a lot of purpose-driven businesses that are solving real-world problems for retail customers, for clients. So that B2C element and using complex technology to improve our access to services and products, or the way we interact, is a real trend. I spent the last 18 years in London. I actually have another fund in London there still. So we're kind of a few years ahead, and the themes we're seeing here in Australia right now are ones that we sort of saw 5 or 6 years ago in the UK, but we're managing to leap ahead. So I'm really excited to see some developments in smart contract and blockchain, for instance, in the AI and machine learning piece, and then again with the RPA. So we've got some SME play with DiviPay. We've got AI with Nod in our portfolio. Smart contracts and blockchain for us is Hutley, which is in the property space. One of our advisors is involved with Civic Ledger. She founded it, which is around water and using smart contracts on real assets. And there's also things using smart contracts around supply chain in the real world, like agri-digital. We've got Fairvine, which is around diversity and for super. You know, women retire with about 40% less super than men, and this is a very much a play around supporting women in generating higher super returns. Provider Choice, which is a fantastic NDIS solution, again a company with real purpose there and great diversity and something very meaningful out the other side. Then one of the other ones we've got is StroPro, which is much more for wholesale investors, but it's around the democratization of financial services. And I think that's one of the things, you know, with Tony and Aaron and others that we see working in this space, making complex products or things that are more the purview of big financial institutions with large balance sheets. Now retail investors, wholesale investors can have access to interesting products. So I think that's really exciting for us as consumers. And we're starting to see this stuff on our phones, on our apps, versus having to go into meetings or having these long, complex conversations and relationships going forward. So really exciting space to be in.
You have been busy, so good luck with all those investees. And it's not surprising that this space is evolving at such pace. We all know the paucities of the traditional banking model, I suppose. So let's gaze a bit more into the future in terms of where that evolution may head. I mean, Tony, what are the technologies or solutions that you think are going to have most impact on shaping the sector in coming years?
Well, we're really excited about open banking. We think it's an absolute game changer. You know, just having real-time access to bank data allows us to help customers, you know, switch from to better products quite easily and seamlessly. And then when open banking gets right access, we could even start to open up bank accounts at another provider. So, you know, we could go the full path from identifying better products to helping them, to actually helping and make the switch happen by creating new accounts at other banks and even moving their money. So it's a little bit like a self-driving finance experience. I think that, you know, autonomous driving, you know, you start off not, you know, still using the steering wheel and, you know, using speed control, but eventually you probably won't even put your hands on the steering wheel. I mean, it'll take a lot of trust to get there, but, you know, you can imagine a world where through open banking and AI, where, you know, your finances can not only be managed, but actually move to better deals fairly automatically. So it's a big bet for us that we'll continue to work in. Then there's the use cases, right? One of the use cases that we're talking to Arun about or here is, you know, just affordability, if you like. You know, if somebody wants to be able to afford a home loan, then you're really starting to analyze their income and expenses, and you get that data, the best data, from open banking. So once you have that data, you can start creating an income and expense and assets and liability report, so you can help automate and streamline those whole processes. So take out some of that friction that's in the market there when people are going for, you know, that part of a home loan or the other things that are around, you know, that experience. They're still there, but there is a piece there where people have to download PDFs and declare their income position. So this will make that far easier. And then that, you know, product comparison example might be that, you know, by understanding what products you're already on, we could see that, hey, it's the 25th of January, you've only made 4 deposits. In order for you to get your bonus interest, you need to make 1 more deposit and you haven't made it. So you'll miss out on $12.16 exactly if you don't make 1 more deposit. So we can really start to use our AI engine and smarts to analyze and interpret good quality data as we go forward. And so between open banking, good quality data, change of processes, and AI, we can bring all that together to, I think, for many use cases as we move forward.
Fascinating. Aaron, I guess you're experiencing a natural updraft as the profusion of neo-banking entrants provides more need for comparative data and more insight. So what new players or offers have you seen that you find interesting, I suppose, in terms of reshaping the model?
Tim, look, in terms of the home lending space or the lending space, it's all about market share. We've seen it with the big four, the majors. People talk about market share, and recently, over the last few years, neobanks are coming. Neobanks interesting in that it is digital. It doesn't have distribution, so they look at distribution as a key area for technologies, and open banking coming through will mean these neobanks, whose market shares are now going up, same as the non-bank lenders, their market shares are going up because they're utilizing technology efficiently, effectively, and on a timely basis. So I feel that over the next 3 to 5 years, there will be certainly a shift in market share to these new entrants. The big four will always be there, but there will be a massive pile at the bottom now where all these tech players will come in and will make the process easier and shift or get market share from the big boys. So in terms of technology, it's a straight through concept. I'm not sure if you saw recently, I think earlier this week, the ACCC came out with a report and said, we're going to be recommending that banks discharge mortgages after product switching within 10 days. At the moment, it takes 90 days because no one wants to lose customers. And that means tech players like ourselves, like the Frollos, the Fintechs of this world, we welcome that because it allows us to use SDP in the whole process. So non-bank lenders who are targeting consumers, there's a massive upside there. We've seen some of them come through and really doing well. And I think mortgage brokers will be a great distribution model for these new banks. And technology is what drives these new banks. We've seen Westpac acquire shares in Afterpay. Why? Because you've got the Afterpay customers, millions of them now able to open bank accounts, and that's a major. So you can see what neobanks will do.
Yeah, as you say, it's not just about technology, it's about kind of new offers, new models, better propositions, right? More efficiency. So, Kathy, you touched on this a bit before, but what are you seeing in that area? New ways of doing things, I suppose, and providing solutions to the customer.
Yeah, so I think B2B, B2C, B2B2C has been the real focus. It's not just here. We've seen it in the UK and the US. Tony and Aaron's touched on two big areas here, open banking and payments in Australia, and a lot of opportunities. And you're seeing a lot of tech coming through that's supporting that, also around your financial security. I think regulatory technology RegTech is a big one here for Australia. Certainly it's been big overseas because we had a lot of changes with regulation post the global financial crisis. We were a little late to follow and after our Royal Commission, we're starting to see some really big impact along the regulatory side and a lot of interesting tech coming in. And we look at that kind of hub and spoke model, and with RegTech in the large financial institutions, they're a great way in for smart tech for the big four and other institutions to start enabling some of this great tech and into their institution without having to rip out the entire heart of their tech stack. I think peer-to-peer is absolutely hot right now. That's kind of C2C, whether it's payments, also around things like contracts. So smart contracts, etc. And another really strong focus we're seeing obviously is ESG. It's in the press, and it's absolutely right to focus on that. And I think the governance piece and what we do with all this fantastic data we're starting to generate is going to be really key going forward. So for us, people are doing great things with interesting tech around data, this great data that's being generated. We think that, it's a strong focus for us going forward.
Okay, thanks, Kathy. And indeed, thanks, Tony and Aaron. Unfortunately, we have to end it there. It's obviously a sector with huge opportunities. And I'll close, therefore, with just one impressive growth metric, and it's this. Just 5 years ago, the Australian fintech industry was worth less than $250 million, and it's now worth more than $4 billion. So that's a CAGR of no less than 75%. Kathy's happy about that, I can see. Anyway, it'd be nice if you can keep that up, and good luck to you all in your future endeavours. Thanks for joining us today, and thanks indeed for all our viewers for watching.
Thanks, Dave.
Thanks, guys.